everybody? Welcome to the Trader Merlin Show. It is your Wednesday edition. Happy Hump Day. Hope you had an enjoyable Taco Tuesday. No crazy mantras to speak of for today. Obviously, Monday we had May the 4th. Yesterday we had Cinco de Mayo, and today we just have a normal every other day. But it was an exciting one. We had some interesting moves in the market, which I will go over when I talk about our top markets. Also, the show today is going to be a little bit different. We were going to talk about real estate today. That's a question that's come up many, many times. And I thought, you know what? Let's just address this topic because a lot of people have been sending in questions at TraderMerlin.com, also on some of our social media channels, about what are the best things to do right now with regards to the real estate. Should we buy a home right now? So maybe you should, maybe you shouldn't. We'll look at this objectively from both sides of the equation after I start off with my morning intro. So if you guys have any questions or comments along the way, feel free to send those on in our chat. As always, hello everybody. It sounds like it's pretty hot out there. I've got Carol, Tomasina, Big Eb, Natalia, Steven, Gayer, Chief E. You might be new to the group, Chief E. Welcome to the show. Good to have you. Dave as well, Karen, and many, many others. Kev Plow, also Herbert. Tons of people out there, and I don't want to forget Sean. I'm going to make sure I get everybody's name in there. At least to start, at a certain point, I'm just going to lose track of everybody's name. So thank you guys for joining us today. Let's get on with the show and see what we've got to talk about for the 6th of May. All right. Yesterday was kind of interesting. We looked at crude oil, and crude oil was on this really nice run for the period of, well, let's call it the better part of 5 or 6 trading sessions. Yesterday it came right up into an area of supply, and it said, you know, guys, if it's going to have a little bit of hesitation, I kind of feel like it's going to happen at this level here, and lo and behold, we had a nice little sell-off today. Nothing major. Crude oil was only down 1.91%, but you notice it did hesitate, even though it crossed that $25 mark on CL. It has a nice little red candle, and it was actually down much more than that during today's trading session. So all in all, nice, somewhat predictable move out there for crude oil. The question is, does that continue over the next couple days and maybe get back down to that $20 mark? You guys should all be very, very excited about John Rowland, who's going to be on the show on Friday, because he has some interesting forecasts for crude oil. And it's one of those ones where you look at it 25 and you go, ooh, there could be some great opportunity here. And I know it's not where you're thinking. You're thinking to the upside. It may actually be to the downside. A lot of it has to do with inventories and things like that, which John Rowland is an absolute expert in. So we'll looking forward to having him on the program on Friday. But that is your crude oil. That's your worst performer. 1.91% slide. Gold also taking it in the chin a little bit today, dropping below that 7,000. Technically, it's starting to look a little bit weaker. I've been rather optimistic on gold for quite some time. I thought we'd see more of a follow-through above that 1,700. It's starting to show a little bit of weakness. How do we know that? We can see it by this most recent period of lower highs. It's been kind of drifting down. Every time it tries to gap up, it just gets beaten back down. So there is definitely selling pressure going on from the institutions on gold right now. It still hasn't broken below these lows. I think if you get down below that 1650 mark or 1660 mark, then you have some downside move on gold. Right now, it's just showing some weakness, hasn't really broken through, and it showed a ton of weakness on this one, but it's getting there. All right, I'm going to move up the list. We'll go to the Russell 2000, which was down 1.02%. Nothing overly noteworthy there. S&P 500, which I am still short, really enjoyed the end-of-day rally. What's noteworthy here, and again, I'm a big practitioner of just looking at what's going on with prices. Notice the last 2 days. Almost the same thing has happened, but today was worse. Why? The candles were almost identical, right? Small body, topping tail, which means at some point it was much higher and then it gave it all back. Today was interesting because with the S&P, we actually closed at session lows. That is not a very good sign, especially for the second day in a row where it was much higher and got beaten down. So I'm really looking forward to tomorrow's trading session, even in the after hours here, because I think you might see this drift down to that 2,800 level. If we get down below that, you'll notice we do have some small little stopping points, but ultimately I think a logical target's going to be right around that 2630, which is 200 points away. That's about 8% from current levels. I don't think it's going to happen in one day, but that trend line, which has been intact since the 23rd of March, is in jeopardy now. Some would argue it's already been broken, and we'll have to wait and see. I think we'll start making some new lows here finally. Can I go and hide the order bar, please? Sure. Let's go view, and we'll go take that order bar out. That better? There you go. Cool. Got the order bar out of the way. Let's see, what else? We're going to go from the S&P to the 10-year. Nothing really noteworthy here. Just the fact that the yields, that the price of this sold off a little bit, which means those yields are rising So I don't have the exact numbers here in front of me. I didn't pull up the list, but yields are rising on that 10-year today. I want them to keep dropping, and that's part of the discussion for today. NASDAQ doing the best. You can see we have our third green candle in a row, although today's is a little bit weaker with regards to structure. It still is positive, up 0.25%, but showing some weakness. Best performer on the day, Bitcoin, and this is probably to do with the halving that's coming. Maybe I'll do a special show next week on the halving that's coming with Bitcoin. Many of you probably don't even understand what that means, the halving. It sounds like some sci-fi flick, but there's a very interesting event going on with Bitcoin. I believe it's going to happen in 5 or 6 days. It's called the halving. Maybe I'll explain that for those of you who are interested in learning more about cryptos. But we rocked all the way up to 9,500 on Bitcoin today. Right now, trading at 9,340. Okay, so I'm going to real quickly show you earnings calendar because this is part of, oops, that's not what we want to show you. This is part of what happened out there today. You had the earnings announcements from Novo Nordisk. Nothing here is really crazy except for Shopify. Look how much Shopify beat earnings by. They were estimated to have a negative 18 cents per share earnings. They came out at a 19-cent profit. Huge turn of events out there for Shopify, and that's part of the reason we've seen this thing just continue to run. I was just marveling over this one with Larry on yesterday's show. Here's Shopify's chart. I mean, today's candle, massive move to the upside. I'll bring up the 5-minute chart here so you guys can see what happens after hours, although those earnings, I believe, came out pre-market. Most New York stocks, their earnings announcement come out pre-market. Yeah, so you can see the earnings announcement happened pre-market here and just obviously well received. But let's be honest, I think we'd all agree that was probably already priced in. I mean, look at this move. If you go back to early March or mid-March, on the 18th of March, it was at $305. It's now at $733. Talk about a crazy, crazy move up there. Okay, that is it for your top markets. We'll go one step further here into the discussion. Again, the earnings announcement were really no big deal out there today, except for Shopify. I didn't see anything else that was that noteworthy or going to really be driving these markets. So I decided to steer today's show towards a couple of questions. There's actually about a dozen of them that came in, but these are the two I could find right away. Alexandra says, how would one take advantage of this economy to buy a house? Is this the right time to invest in real estate purchases? Also had another one come in from Heath in Atlanta. So hello, Heath. Says, my wife and I think it's a good time to buy a home. What do you think? Well, look, I can't make that decision for anybody out there. All we can do is look at the facts, look at the figures, and help us understand maybe a little better, should we buy a home right now? Now, I know this is a topic of discussion for many people and of interest to many people out there because obviously a major home purchase is a significant decision that we should all make at some point. Before you think that this is the time to buy a home because of the historically low rates or the markets or a potential crash or anything like that, there's one thing that trumps all of that, and that is, are you ready to buy a home? And there's certain things that I feel should be looked at with regards to preparedness for this. A lot of people look at the opportunity and say, it's a great time to buy a home, but your home isn't even in order already. So what are some of those things that I think should be in order before you even think about buying a home? Number one, without a doubt, is your debt. Are you debt-free? Now, when I say debt-free, that doesn't mean that you have 100% debt-free. Obviously, there might be some obligations, like maybe it's a car payment. That's okay because that fits into one of our necessities, transportation. But if you have credit card debt, first off, that's going to make it a challenge for you to get a loan anyway. So your first goal should be, number one, get all of your debt cleared. If you're carrying debt, it means one of two things. Either you feel like the money that you can use, you're going to get a greater rate of return than what you're paying on that debt. For example, let's say you've got a 5% loan that's for $10,000. If you're not paying off that loan, you're probably trying to use that money to make more than 5%. And in theory, if you can make 7% on a 5% loan, then you made 2% profit. That's great. But to get a loan for a home, they are really, really stingy with regards to requirements right now. I'm sure some of our audience out there are real estate agents or maybe even the lending industry. They've really tightened their numbers. JP Morgan or Chase came out and said they're now going to require 20% down. I know when I bought my home, this home here, I had an 830 credit score, and they were still ripping every little thing apart. I mean, they were finding flaws in everything. And that's with an 830 credit score. Right now, I think that those standards are starting to rise again, so they're going to scrutinize everything, and debt is a huge factor. So get those credit cards to zero. It shows that you have fiscal responsibility, and if you can pay off your credit cards, then the lender's going to feel much more confident that you can pay them off, because that's all they really care about. They don't care about what you do to the home or anything. They want to make sure that you can pay off that loan. Second piece of this is the necessities in your life. We all have them, and you should be able to cover your necessities. What I mean by that is you should be able to cover 4 key things. Number 1 is going to be your food. What do you eat? You don't want to be buying a home at the expense of, well, now all of a sudden I can't feed myself or my family. So food, shelter, your current situation, renting or owning a home, make sure those are paid. Transportation, how do we get to and from where we need to go? And the last one there would be utilities. Well, obviously, food, electric and heating and internet, TV, whatever, telephone, wherever those utilities might be. Those are kind of the 4 things that you need to cover. And to me, that kind of falls into the debt side of things. And this is why when we taught these classes for Online Trading Academy, and there's still some great calculators at their website you guys can use. It's a home budget planner. You should start there and just run a home budget planner and see where do you stand with all of your expenses, all your income, and all of your debt. And if that number is positive at the end of the month, then that's obviously a very good sign for you and also for lenders. So let's go from the necessity side of things and take it a little bit deeper, which is going into the one that most people overlook, which I believe, and some will say 3 months. I'm more cautious. I would say you should have 6 months of an emergency fund. And there's a specific reason for that. We never know what's going to happen. We never know exactly how things are going to transpire for us going forward. And I want to make sure that if something does happen, if the proverbial doo-doo hits the fan, that I'm protected. And a good situation would happen with Online Trading Academy, right? They had to, because of what was going on with the FTC, they had to let everybody go. So all of a sudden, I'm in a situation where I have no income, which was totally fine with me because I have done my best over the years to set myself up financially where I'm not concerned in living check to check. If you're in that category and you're out there just checking your mailbox every day to see if your stimulus check came, then you have a problem. We need to start building up that emergency fund, right? Start being more fiscally responsible. Last one here is going to be one that I feel is maybe a little bit more subjective, but I think we should all be thinking about it, and that is how much you're spending towards your retirement. Right? You should be, after putting in, let's say, 10% of your income into retirement, what do you have left? If you now have enough, Katie says ramen is only 99 cents. I think it's actually 33 cents because I just picked up 3 of them, Katie, for 99 cents the other day because I'll be honest, I actually do like top ramen. It's so good. But thanks for that one. Yes, that's an expense saver right there. So these 4, obviously the last one isn't the most critical because many would argue that your home is your retirement vehicle. Okay, but I wouldn't want to put all the emphasis on that one. So make sure you're debt-free. You cover your necessities, meaning your food, your shelter, transportation, utilities. Always make sure you have 6 months emergency fund. And that's not just for an emergency. I mean, let's say you buy your new home and all of a sudden your water heater goes out or you have a roofing issue and you need to come up with $5,000, $10,000, $15,000 to fix that stuff right away. That, to me, is part of that emergency fund as well. So and we all know that no home, when you buy it, is all of a sudden perfect and there's no problems. There always seems to be some issues with homes. My home was actually new construction. I tell you, there's all kinds of crazy stuff. They were in such haste to get out of this because they bought it in foreclosure. A bank bought a big basket of securities of homes in foreclosure, and I mean, I had hot live wires underneath my house, literally live wires dangling underneath the house, much to the dismay of the electrician who was down there working on something. All right, so those are the main pieces, right? It's really a decision of should you buy a house is up to you and your personal situation. Now, let's say you run through these 4 things. You say, I'm setting myself up for retirement. I've got all my expenses covered. I'm debt-free. Maybe I got a car payment, but that's part of those necessities, the transportation, and I've got 6 months saved. Now, the question is, should you buy a home right now? And again, I think you have to look at the data here. And I saw a comment coming through earlier. I believe Karen's a real estate agent. Or a realtor, and she was saying location. Yes, location is absolutely critical for this as well, right? There's certain states where housing markets are going up right now, and there's some where housing markets are going down, and that will always be the case. They don't always go the same direction. There's a general tendency for home prices to follow the same direction, but they don't always move in that same direction. Okay, Let's go to, Talia says, capital expenses can bite you in the, yes, they can. Big time. So I'm going to show you a whole bunch of charts here, and I'm hoping that these are eye-openers and will help explain the picture a little bit. And I'll give my summary at the end of what I think you should be doing right now with regards to a home. So first off, I wanted to show you this chart here, which is mortgage rates. This is one of the reasons I think Alexandra and Heath and others have been saying, hey, I want to buy a house because look at these rates. They are so cheap right now. I've got it going all the way back to 2000. And you can see back in 2000, rates were up around 8% for a 30-year fixed. Right now, I mean, you're looking at rates that are very, very low. I put this last bit on here. This is Freddie Mac's rates as of today. And I locked in 2016. So 4 years ago, I locked in at a 2.875 on a 15-year fix, and I thought I was king of the world. I felt like Leonardo DiCaprio standing on front of the Titanic, just like, yes, I can't believe it, 2.875, you kidding me? Now, that's the norm. I mean, you're getting at a 3.25 for a 30-year fixed mortgage out there. That is like almost free money. I mean, it's crazy how cheap it is. I know it's not free money. Who knows, at some point it might be negative and actually be free money. But the point is, this is very appealing for anybody who wants to buy a home because the rates are so cheap. That is definitely one of the positive signs out there. So first off, it's what's the cost for us to buy whatever home we decide to buy. The second chart here is a little subjective in my opinion. Case-Shiller is a company that does a bunch of reports on the housing markets and prices, and there's several different benchmarks. There's the Case-Shiller Composite Home Price Index, which is going to be your national average. There's also a 10 and a 20. But you can see, going back into 1988 on the left-hand side of this chart, we've definitely had some wild fluctuations and swings in the prices of homes. What I wanted to kind of point out here is from this point right here, actually, now that I learned how to doodle on the charts, I will just totally torture you guys. I'm going to go here, and from this point right here, oops, that is down, sorry, I can't draw a straight line, I'm drawing with a mouse. My art skills have fallen away significantly. You really look about 2013, the home prices were still increasing. That's going to be a year-over-year change, but back in 2014, it was like 10% per year. Then it dropped, and all of a sudden, a year later, we're looking at 5%. We're still increasing. You can see that these are curling up on the hard red edge, and it's still above zero. That's a good sign. That means home prices are still going up, albeit at a slower pace. What's noteworthy here for me is the trajectory, right? We have been slowly trending down here with regards to home prices since 2014. At least the move up in home prices has been starting to slow down a little bit. So if you're buying a home with the thought of, hey, you know what? I'm going to buy a home and it's going to go up 10% per year, that probably is not going to happen. It looks to me like these rates or these home prices are going to be sliding further. Now, how many of you love Zillow? For our real estate friends out there who love Zillow, we all know that Zillow is pretty much a joke, right? I would say that prices on Zillow are going to be probably 10 to 20% higher than the actual price that you could get. But it is entertaining to go look at their prices. Now, this also, and I know I'm going to really upset some real estate agents here in the crowd, real estate agents generally don't like to be bearish on the market. It's like a gold bug. Gold bugs never want to tell you that gold's going down. It's always going to go up. And real estate agents are normally that same way. They're like, hey, now's the time to buy. And the argument is, we have really low rates, so now's the time to buy. But that's one variable to buying a home. The other part here is the forecast for prices going forward, which is why I showed you this chart by the Case-Shiller Composite 20 and 10 and national average, is it's slowing. I found this really interesting. Zillow actually came out with an illustration which shows that prices are going to be dropping. This is their home price projections. In the most optimistic projection that they have, home prices are going to drop by about 2%, which, let's be honest, is not the worst in the world, especially when we have a market that's down, 16%, possibly even more, in my opinion. But their most pessimistic target shows that they're going to see about a 4% drop. I found this fascinating that Zillow would even forecast that coming down. Yeah, no, please, any charts you want to share with me, I'd love to share also. So this is interesting because it's showing the forecast is a bit pessimistic, and you normally don't see that with regards to housing markets. A great comment here. Inventory is the lowest in California, and the prices shouldn't go down here. They shouldn't, but I have a couple of factors here, Sheena, that I think might actually paint a little bit negative picture there. Joseph Silo says, buy new or used. Depends on what you want to do. If you want that turnkey, design it, go with your Toll Brothers, Lennar, those types of, that's fine. I'd prefer personally to buy used. Usually there's more room for negotiations. You can find sellers who are desperate. Those home builders know exactly what they're going to get, and there's less room for working or finagling with them. I also like to build and work on my own home. I always like projects. So to me, I would personally always buy used, but that's just a matter of personal preference. You see what price works best for you. Let's see. There was another one. Karen says, cheap money for 30 years cannot be beat. That's true. It's really hard to look at, 30-year money at 3%. That's really crazy. One of my friends a long time ago, he says, if you can borrow money, this is when it was at 5%, if you can borrow money at 5% and invest it in the market and get 8%, you're making 3% for free. And I said, yeah, on paper, that sounds great. But what happens if I take that money that I'm paying 5% on and all of a sudden I'm, down 20? Those numbers don't work. So certainly don't pull that money out and throw it in the markets and take that kind of gamble. That we shouldn't be doing. But yes, we are seeing very, very low rates right now. Joseph says mortgage defaults possible in California. I'm getting there. Trust me, that's a big factor to this presentation. Okay, so we've got Zillow basically saying home prices they feel are sliding. I wanted to show you this next one here, which is from the Fed. This is from the Federal Reserve, and I apologize if it's a little blurry. I couldn't get it all in here. What I want you guys to notice are these little red boxes I'm going to put on. This is home prices. Now, the top line there that I put in the little red box, you see that big surge up. That's the Case-Shiller National Home Price Index, and you can see that from 2002 to 2008 or 9. Prices were spiking. They were just soaring, right? Really, really moving to the upside. But look at everything else. These lines here, and I'm colorblind, so I apologize. I believe it's like a red line. That's average hourly earnings and production, okay? The other line, and they're all trending up, which is what they should be doing. The, I guess, purple line there is rent equivalents, right? And you notice that these three lines, the average hourly earnings, consumer price index, and rents, are all trending up and pretty much sticking together. The outlier here is the home price index, which you can see spiking up to here. That was a huge spike. So this period in that red box shows a huge separation from the norm. Now, if you guys follow me at all, you know that I'm not a huge indicator fan, but one that I do like to use are moving averages because it shows you elasticity of price. If we have something that's trending at this angle, and for those that can't see, maybe watching the pod or listening to the podcast, I've got my arm at probably about, I'll make it a 30-degree angle. If all of a sudden a price or whatever statistical data we're measuring falls below that or above it, that's fine, that's normal. It's how extended it becomes above it. And the further it becomes extended above or below, the more likely there's this elasticity to price where it's going to come back to that average. Well, we could see that back here in 2006, 7, and 8, where it got really extended, and therefore it came ripping back down. Well, if we move that forward to where we are right now, you guys can see it's pretty extended, right? We're really starting to see that elasticity and prices stretch up with regards to home prices. So for those who are looking to buy a home right now, the argument I would make here, based purely off of data, is home prices have gotten a little extended. They're a little stretched out. And that just makes sense, right? We've had money extremely cheap for years now. Years. So it's easier for people to buy homes. They drop their lending requirements and more money's coming in. That's going to drive home prices up. We were in an economic boom. People had huge paper profits in the equity markets, in the stock markets, in their 401ks. There's optimism abound from 2012 to about 2019. And you can see on that price chart that the spike there, really the last big time or good time to buy a home, one of the best times to buy a home, was back in 2012. And how do we know that? Because right here is where it came back down to its norm. It came back to the average. We haven't seen that. So I would say this is a negative mark on buying a home right now, just because prices have been rather extended. That is not a deal breaker. That's just saying, just pointing out some data. Okay, your next one here is a question that came through earlier from a gentleman in the crowd, which is about mortgage delinquencies. And it's not just California. This is going to be a national one. So these are all loans that are past due according to MBA. This also shows you unemployment rate, because I feel that there's a real tight correlation between unemployment and mortgage delinquencies. I think we could all make that simple assessment, right? If people don't have jobs, the odds of them defaulting on their mortgage is probably going to increase. So notice historically how this looks. And it goes all the way back into the 80s. Yes, there were some people talking about mortgage rates. I think it got to 16% for a 30-year fix. That is tough, real tough. The orange line or gold line, or whatever color this line is, that's unemployment rate. And I'll go to our most recent data, the ones that most of us remember. We peaked on unemployment back in 2010 at right around 10%. And we've been dropping ever since. According to the Fed, 5.5%, which is right here, is full employment. That's what they called full employment. Notice we've been drifting down, right? We got down to about 3.5% unemployment. The amount of defaults was really, really low. That's 3.77%. So according to this really says markets are robust and looking good. Nobody's defaulting. We've got everybody working. But we know that has all changed in the past couple of months. Here's the chart I want to share with you. And I just remember that previous one where unemployment rate was pretty much lockstep with foreclosures, right? And let me just real quickly so you guys can commit this into memory. Remember, the orange line is unemployment and the blue line is defaults, mortgage delinquencies, right? So in theory, if unemployment spikes, we should see mortgage delinquency spike. We'll take a peek at this next chart. I pulled this data today. This is the unemployment rate. And by the way, guys, Friday is a huge day for our markets. This could be one that really, and I know you guys hate when I swear on the program, but there's a phrase that we use in the market where something shits the bed. Friday could be that the market shits the bed moment. Why? Because unemployment numbers come out. And we have not seen an unemployment number like this in decades. I believe even going back to the Great Depression, the forecast was not even this grim. Check this chart out. This is like one of those ones you go, oh God. I'm not trying to be the purveyor of doom and gloom. It's opportunity, guys. Take a peek at this. The number I want you to focus on is the most recent number. We jumped to 4.4%. Mind you, we were down at like 3.3, 3.5. We're looking really good with unemployment. And all of a sudden, we jumped to 4.4. Look at that in relationship to where we were back here during our Great Recession, right? Great Recession, we hit 10%. So we're still looking good. Look at the unemployment number for Friday. This is the expectation is 16%. Now, if we can do simple extrapolation of data and say that when we have low unemployment, we have low mortgage defaults. That's a clear trend we can see by those charts going back into the late 70s. That's a fact. If all of a sudden we have unemployment numbers spiking through the roof and soaring to levels that far eclipse what we saw in 2000, that might increase the number of delinquencies in the mortgage space. Would you not agree? I think everyone should agree with that if we have a 16% unemployment, there's some people that are going to go, shit, I can't make my mortgage payment. Now, there is forbearance, right? Forbearance is where the lender will say, okay, you can forego payments for 90 days, but you're going to have to pay us back at some point. Initially, that was unclear on how that forbearance would go here in the U.S. And mind you, the forbearance is for government loans, Fannie Mae, Freddie Mac stuff. Other than that, not really. If it's a private lender or someone else, you might not be able to get forbearance. I'm hoping they do, just out of humanity they would. But now they're letting you add that on to the end of the loan. It wasn't clear early when they started talking about forbearance. The thought was that after 90 days, you have to pay that off in full. And people don't have jobs right now, so that would just not make sense. Now they're adding it on to the length of your loan. So it's a nice tool, and you can do 2 forbearances, which is a huge factor in helping this housing market out. But I still feel you're going to see a bunch of spike up here with regards to those unemployment numbers and defaults. Okay, let's go a couple more charts here. I'm almost done, guys. I know. You're probably getting tired of me talking. Here is your properties with foreclosure filings. Now, we were talking about issues with regards to late payments. This is actual foreclosure filings. And you can see Q1, we had a 41 or 46% increase in it. That's this hard right edge pop right there. Still very, very low historically. So I wanted to just, in my own weird little way, put these two together and see what they might look like. And I know it's not the best chart because I had to literally do a transparency level and put one on top of the other, but check this one out. This is the unemployment in blue. That's the unemployment rate. And then the foreclosure filings. And I tied them right here. This is where they the chart starts, right, on the left side to where we are today, I think you would all agree that these are pretty lockstep. They look pretty tight together. They follow the same shape. Therefore, if we saw a huge spike in unemployment claims, we'd probably see a big spike in foreclosure filings, right? And that's the story I have, and I'm sticking to it. So those are some pretty ugly charts out there. Now, what does this all mean? Why am I bringing all these charts up? Because I feel that you have to look at your time frame and your goal and objective for buying a home. Number one, as I mentioned at the very beginning, is are you ready for it? Can you afford it? I mean, obviously, those who are homeowners know there's always ongoing costs with homes. You got your property taxes, your insurance, and all these different factors going in that you need to have money and income coming in. So if it looks iffy, and this is why I'm a little bit nervous right now, I don't know if we're out of the woods yet with regard to this whole coronavirus thing. Some places are opening up, which is great. Let's get us back out there and start getting back to a real life. The challenge here is some of us may go back to work or look to go back to work, and those jobs aren't there because that company can't open up to its full extent or the business just isn't there. So I think this is really going to start to add up. We'll see a 16 or 17% unemployment rate. That might go up for another month or two and then hopefully slowly drift off. But still, having an unemployment rate, let's say 10%, is going to create havoc. So if you're a buyer of a home and you say, I feel good about it, I want to lock in the great rates, I covered all my bases, I'm debt-free, I can pay my transportation, my food, my utilities, my shelter, all that stuff, then okay. And you feel like this is what you want to do. You want to live in that home, and this can be your place to abide in. Abode? I think the wrong words. My vernacular is dropping today. Then I would say go for it, but be careful. I would put yourself in the driver's seat. Don't be chasing bids. Don't chase and bid prices up. Go for what your numbers tell you is right and stick with it, because ultimately you're going to have to make those payments going forward. So don't get caught up in the emotions of a bidding war on a piece of property. Find the right one for you. Look at comps and different numbers for specific areas and make sure that it is the place that you want to buy, not just from where you want to live, but also is it the right place? Is there a history of price appreciation, or are things starting to look a little bit worse in that specific area? I personally, if I had my choice right now, I would hold off. Now, I know Brendan, who's one of our viewers out there, he's in the process of selling a home right now. This is an idea that I actually really want to do. I actually would rather sell my home right now because we have elevated prices and people might have access to money, and that's good, so they can buy it. I do believe you're going to see home prices come down more than 2 or 3%. I think you could see a 15 or 20% decline in home prices. And if I can do that and buy back in at a much lower market price, then I'm happy to do so. So I would probably hold off if it was me. I would wait for it to drop a little bit, because here's the thing. If the housing market starts to drop, and let's say it drops 10, 15, 20, 30%, they're not going to raise rates. Rates will stay very low because they need those rates low to help spur the economy. Now, those rates may go even lower. I mean, it seems inconceivable to think that I could probably, in the next year, buy a 15-year fixed for, let's say, 1%. It seems unbelievable, but it could happen. I don't actually know how it would work if you bought an inverted negative yield mortgage, right, where you're actually paying back less than you borrowed. I hope it does happen. That'd be phenomenal. But those are things we have to look and say, what does the forecast for you for the market going forward mean to your housing prices? Right now, it's a tidal wave of uncertainty, an absolute avalanche of uncertainty out there in the marketplace. We don't know where anything's going. Obviously, we know historically everything goes up, but that's historically. How long are we going to wait for that? A year, 5 years, 10 years, 20 years? I don't know. So I think you're due for a correction in the housing market. I think you'll probably see those housing markets come down. Of course, my dad is probably watching this right now, and he's upset because he's a real estate agent in Sonoma County. So if you need a Sonoma County real estate agent, I got one for you. The best in the business. But yeah, these markets to me are teetering on a decent sell-off here. And if this is anything prolonged, if we start to see another resurgence of cases, especially with what's going on in Southern California and the beaches, then this could stretch it out even longer. And how long will they allow you to, declare forbearance on a loan? I think that will probably not be that long. There'll be a lot more foreclosures. So it could get fairly ugly out there. Harrison says, I shouldn't have a problem selling a Bay Area house. No, you shouldn't. Here's the only other issue I see with this. While we look at those mortgage rates, and I'll bring them back up here just because I think it's astounding how cheap they are. It's just incredible. Where's the rate image I had here? When you look at these rates, no, I want to go one more back. Sorry, I'm doing multiple things here. This is the one I wanted for you guys. When you look at these mortgage rates, you go, yeah, I really want to take advantage of this. But remember, there are certain companies who have raised their lending requirements. When the market starts to look pessimistic, as the equity markets are right now, as the bond market is, and as the housing market is beginning to look, it's still trending up, but it's starting to look a little bit weaker. Obviously, these other factors could bring the housing market down with it. Lenders are going, you know what, this means more risk. Because the lenders are doing the exact same thing that we should be doing, which is evaluating our personal situation. What's our risk exposure? So I started off by saying, look, make sure you have your debt free. Because if you're not debt free and you go and buy yourself a new home, that's a huge risk to you. So for a lender, they're going to tighten up those requirements, right? There's all kinds of loan to debt value ratios and all sorts of metrics they use. They're probably going to raise those numbers because they know this market has the potential to drop further. And if that happens, they can't take on that risk. So there's a big part of this is, even though rates are really low, people may not qualify. Remember, we're going to probably see a 16% unemployment number on Friday. 16%. I mean, that is a ridiculous amount of people unemployed. All of those people will no longer qualify for a loan because they don't have 2 months worth of W-2, income statements. That's one of the primary requirements. You got to have, do you have a job with steady income? No, I'm unemployed. Okay, there you go. You got no loan. So while it seems nice that these rates are so low, fewer and fewer people will be qualifying for them, and therefore they will have an inability to buy those homes and push them up, which is, again, why I'm a little bit bearish here on the housing market, and I think you'll see a decline. Sorry for those that are the real estate agents out there. I know you're like, God, Merlin, shut up, you're killing me. Look, there's opportunity out there abound, and there will be great opportunities to buy houses for the rest of our lives. It's just market timing. Look at those charts, and if prices show they're over elevated, just hold off for a little bit, right? Don't need to be any real rush. There's obviously ways we can make money in a rising market like that. You can go to multifamily and buy, an apartment building because rents are not dropping. Rents are going to continue to move up because if we go through another period of foreclosures like we saw back in 2008, 9, and 10, then a lot of people will no longer be able to afford a home. And what do they have to do? They got to live somewhere. They're going to go rent. So rent prices have been fairly steadily rising for as long as I can remember, and that probably won't change at any point in the near future. Yes, and Natalia says so many property owners are suffering right now because their tenants can't pay, and that's certainly a factor. I mean, it's certainly a factor. But that's also part of the business of being a landlord or a property owner is you calculate that in. You calculate and factor in an amount of delinquency. You should always have that in there and say, okay, well, how much per month am I expecting there to be a non-payment? Right now, those numbers need to be moving up because it's starting to look a little more bleak with regards to people and their income, etc. All right, let me see if I can go to some listener questions here. Subjective question. What are your thoughts on using the down payment money to trade the markets instead of buying? I'd have to say no. You're looking at two separate things. If you're looking, let's say you got 20 grand, or I see 20% down to be a $40,000 house. Yeah, that would be a really cheap house, wouldn't it? I mean, $80,000 home. Let's say you got 100 grand you're going to use for your down payment, right? If it's 20%, that means you're buying a $500,000 home. So if you've got 100 grand sitting there and it's earmarked for buying a home, you could invest it, but I would be extremely cautious. Do not be buying doubles or triple ETFs. Don't be buying crude oil. Don't be jumping on, Amazon or these crazy high flyers. Buy an ETF that's diversified. Buy something that's got a low beta so it's not moving a lot. I would put some of that money to work, but certainly you can't take that kind of risk. I'm too afraid to say go ahead and trade and invest it because I've seen too many people blow it and lose all their money because they just don't have good discipline or money management skills with regards to trading. So I wouldn't. I personally would because I know myself and I know these markets well enough that I'll probably get a decent rate of return. What I'm doing right now is I have the opportunity to buy some homes and I'm like, I'm going to actually take opportunities in these markets. I think there's more opportunity there. But if you're not skilled, you don't have discipline or risk management and trust yourself in these markets, I wouldn't do it. It's just too easy to lose money in these markets. Let's see. Refi if you can. I was able to reduce by $400. Yeah, absolutely, Mike. And it's kind of funny because I was thinking about refinancing, just going from a 15 to a 30, just to make it a little bit easier on my payments. But I'm going to stay with that 15. Karen says traded money can be lost. Real estate, it's not so easily lost. I'm glad you said not so easily because you can lose money. But yeah, it's going to be a more stable investment. The people in 2006, 7, and 8 would probably argue that and say, well, I lost a lot of money. A lot of people did. But real estate certainly is going to be better for that from a capital appreciation. And again, you don't get your 30% gains per year, but you might get 3, 4, 5, 6% gains per year. And that's stable growth. More importantly, it's a roof over your head. It's one of our major necessities in life is having a roof over our head, a place we can call home. To me, there's an intangible value there. I will always be a homeowner. I'll never rent again. Oh God, listen to my friends who have apartments. It's gut wrenching listening to their stories. Let's see what else I got here. Oh, well, I won't make any political statements here. I see some of you guys going down the politics route. Oh yeah, The Big Short, Gino. That's a really good one. And the crazy part about it is there's always somebody who knows about this stuff. There's somebody out there that just knows and is working that angle. Yeah, that's a great movie. Let's see. Yeah. Well, yeah. Inflation obviously going to have a huge impact on it. Olsey, when you say, do I factor in human loss as well, what do you mean by that? You talking about like death from the coronavirus? Look, I'm not a conspiracy theorist or anything like that, but I think that I think that the numbers that we'll see from the coronavirus are not that significant. It's a loss of life, I understand that, but I mean, we were told initially this is going to be millions and tens of millions of people, the Spanish flu all over again. The numbers aren't anywhere near that, so I think it's going to not be as much of an impact. Certainly, there's going to be death along the way, but is it such a death toll that all of a sudden it's going to have a huge impact on the equity markets and housing markets? Probably not. Let's see what else I got. I think I pretty much got everything. I got most of your questions out there. Sorry, I'm trying to talk and do all this stuff here. Okay, I got that one. If you got some, go ahead and type them in right now. I'm going to just try to get some of these questions. Dave, you're cracking me up over there. All right. Well, there's just too many for me to scroll through right now, so unfortunately, I won't be able to get to all those. But if you guys have some, feel free to type them all in. All right. So that was the perspective I have on it, and I'm sure some of you have different perspectives on it. Like I would say with anything, whether it's buying a car, buying a home, investing in the markets, it's all about understanding the playing field that you're getting into. While it's enticing and seems very appealing to buy a home right now, and I'm sure everyone would love to own a home, it's always a question of, is now the right time? I showed you a bunch of charts here which show you supporting for a good time. Like, yes, it is a good time. And there's also some out there that say maybe not, hold off a little bit. I think you're probably best waiting a little bit, seeing how the dust settles from the coronavirus thing. I've noticed in the past couple months, actually since February, a lot of homes in my area have all of a sudden gone up for sale. I found that very interesting. It happened very quickly as a lot of people are thinking, hey, I'm going to take my money and run because housing prices have spiked up. And I thought about that too, but you know what? I've got a 115-pound German Shepherd, and I certainly don't want to go rent an apartment somewhere. I don't want to deal with the whole rental process, so I'm just going to stay put where I'm at and ride it out and hopefully have some nice capital when this dust settles, if the markets do drop in the real estate area, to go and buy myself some more properties and maybe even a bigger yard for my big furry pet over there. Kevin says I could take those $100,000, put them in a 2% bond ladder, and make more than what I would pay in the current rates. Yes, you could. But remember, these are variable rates. I think you'll probably see these rates stay low for quite some time. I just feel the pressure is too strong on the central banks and the government to keep rates as low as possible, and maybe even see negative. I think it's. I would never have guessed in a million years that we would see negative rates, but it could come to the U.S. I never heard estimates for. We're gonna go back to work. Yeah, I don't know, Tom. I don't know how many people are going to be called back. We know how many people have lost their jobs, but that's why I said there's this uncertainty. We don't know what percentage of those people who have been laid off or on furloughed are going to come back. I think a lot of businesses are going to make a tough choice here and say, we're not coming back full force. They just can't. Things are going to be different. Dave says, I can't see prices spiking up as a result of the virus. Yeah, I agree. I don't think you're going to see a spike up. I think you'll see them slowly drift down. And maybe down the road they will. Conspiracy theories, coronavirus seems like a good, yeah, it is. Let's just say it's perfectly timed, this coronavirus thing. And seeing some of the numbers, a friend of mine was talking about it with me last night, and I just said, I don't know if I trust all these numbers. You're getting these numbers from China and Canada and the U.S. Who knows what information we're getting nowadays is legit and real. Obviously, we all need to be careful out there because this could be obviously much worse, but seems like it's not as bad as everyone has portrayed it. Okay, let's see. If you're having a hard time selling, finding properties, it's still a seller's market. Yes, it is a seller's market because that momentum, as we showed, is still moving up. But instead of moving up, let's say, at a 30-degree angle on prices, it's now moving up at like a 5-degree. So you're still seeing prices are slowly trickling up. But as there's a common phrase in the markets that says, the trend is your friend till the bend at the end. And the trend in housing market has been really good since 2009. Since it bottomed in 2009, and has been trending real nice ever since then. Now you're seeing it slow down a little bit. Is that the warning sign? Is that the next break till we get a retracement? It's only natural in everything to have a surge in prices followed by a pullback. And we haven't really had a pullback in housing prices for quite some time. My feeling is that it's due, so just be careful out there. If you're comfortable with all the numbers that you sign and you say, hey, I'm going to have my job, I'm comfortable making all these payments and my debt is settled, then sure, go for it, as long as it's the right decision for you. All right, long-winded show out there today, at least for real estate side of things. Hopefully that answered Alexandra and Heath's question and a few others that sent in with regards to housing market. You can't be definitive and say, is now the time to buy. There's a lot of arguments for it, a lot of arguments against it. It's really what's best for you. So most of it comes down to doing your own personal finances and checking those numbers and see if they do work for you. There are some calculators at tradingacademy.com, which we've used in the past. One's a home budget calculator under the calculators tab, which is great. I really think that you guys should be using those every day. And Sheena, you don't need to apologize to me. It's okay. Sheena says, I don't think it will bend much. Ultimately time will tell. I just know the course of price action. There's always this up, down. And generally, it's going to continue to move to the upside over time because markets go up over time. So we'll have to wait and see how it all pans out. I liquidated. I thought it was actually going to start selling off last year or 2 years ago. So I sold out of my one of my properties, went to cash. But yeah, everyone is entitled to their own opinion. That's what the whole moral of this presentation was. Is we have to make our own decisions based off the information available to us and remove emotions from the equation. Make sure that when you do make this purchase, if you are, that it's not, I want this home so bad, I just want it. That's not the right reason to buy. You have to buy it because it's the right thing for you to do in your personal situation. So, all right, let me go to next stuff. We've got more to talk about here, and that's, of course, the end of day pieces. I think I had them all lined up here. Let me bring it up for you. Where's my charts? I want to make sure you guys hear about the earnings because we saw Shopify tonight or this morning. What a huge runner that was. Here's your earnings for tomorrow. This is the 7th of May. You can see we got Bristol Myers Squibb. What else? This is Anheuser-Busch, for those of you who think that their stock's going up. I'm hearing about a lot of beer being wasted. I know. I should have a memorial show for all the beer just being dumped out right now. Pfizer, you've got Bookings Holding, Nintendo, Raytheon, Uber, Walmart Mexico, and Digital Reality. There's also, I believe, another 500 or 400 and something stocks reporting earnings tomorrow. So be careful. There's a lot of them out there with different earnings announcements. Make sure you check your earnings calendar so you don't get caught off guard if anything you might be trading. Lastly, we'll look at economic announcements. Here's what's cooking for tomorrow. The unemployment claims numbers are expected to drop, which is okay. Remember, we've had some significant spikes in the last 6 weeks. We've had 30 million people file for unemployment. They're looking at another 3 million tomorrow, which is, again, still showing there's a problem for our markets going forward. Other than that, I don't see too much here on the list that's really, really noteworthy. Maybe if you're trading the Aussie dollar, tomorrow night at 6:30 California time, you have the RBA monetary policy statement. That might create some waves for that Australian dollar, which has been having some great moves lately. Let's bring up the AUD-USD. AUD-USD. Look at those. That's huge swings in prices for over the past couple of months. So we'll see how this one transpires for the Australian dollar. It's still on an uptrend right now, but just looking like the U.S. equity market slowly rolling, the U.S. equity market slowly rolling over right now, and we'll see if that ends up being a pullback down at maybe some mid-60 level or lower 60 levels. Cool. No beer wasted over there with you, Big Ev. Yeah, mine's doing pretty good. All right, searches. Can I go more in detail on the Bitcoin halving? Yeah, let me. My next couple shows are going to be pretty busy. Tomorrow, we're going to have my friend Zach on, and Zach has been in the cannabis industry for a long time, so I wanted to mix things up a little bit. I know some of you might be anti, some might be pro. It's neither here nor there. This is a viable business. It's huge, booming around the world right now. So I want to kind of pull back and go a little bit deeper into what are some of the things that are going on in the industry. What we generally see in a fledgling industry that's starting off is a billion different participants, and then all of a sudden consolidation, and starts to gel. And we'll find out who are maybe some of the key players out there and what's really the direction that this industry is going, because the cannabis industry has been on a wild ride. I mean, we can go look at MJ here, which represents a basket of securities out there. Let's go full left. We still have this triangle pattern forming. It still looks pretty good for upside movement here, but that is an ETF representing cannabis. And if you look at where it came from, I'll make it a weekly chart. You know, it's been beaten down. I think we'd all agree that this is not an industry that's going to disappear or go away. It will morph, it will change, and there'll be consolidation. So Zach will be our guest tomorrow talking about that. Hopefully you guys have some questions ready in that space for Zach or myself. If you like today's show, by the way, do me a favor, hit that little thumbs up button out there. We always appreciate that. If you do have an iPhone, one of the best things you can do actually to help the show is go to iTunes and just subscribe to the Trader Merlin podcast. Leave a comment down there as well. That helps me out tremendously. It's so bizarre. We started Power Trading Radio 10 years ago, and it's still on the front page on iTunes. We haven't done a show in almost 3 months on that thing. It's still number one because we started so long ago. My goal is to get Trader Merlin on that page on iTunes, which really helps me out. So if you guys have an opportunity, go out there and just download it on your iPhone. You don't have to listen to it. Just put it in the background, let it play, or do as I do, which I just play them and let them. I keep it on mute, but I play my own show. I don't know, my egomaniac in it. All right, that will do it for today's show, everybody. Again, if you have questions, put them down in the comment below. If you like the show, click that little thumbs up button. Always appreciate it. You can send in comments, questions, feedback, which I do listen to a lot, at TraderMerlin.com. Until then, happy trading, everyone. I hope you have a great day, and I will see you tomorrow talking cannabis on Trader Merlin. Till then, see you tomorrow.